Good afternoon, everyone. Thank you for making time to attend the session, during which we will share updates on recent tax and customs audit trends. My name is Yu-Jin. I am a corporate tax partner with KPMG Korea. I have served a variety of multinational clients providing assistance during tax audits, consulting on overall domestic and international tax matters, and also advising on structuring and M&A transactions. Today, I'd also like to introduce our panelists who will be sharing invaluable experiences and insights related to today's topic. To my left is Kyu-Dong Kim. He is a tax partner at Yulchon who focuses primarily on international tax matters. He is a co-leader of Yulchon's international tax practice. Before joining Yulchon, Kyu-Dong has worked over 10 years as a tax professional at PricewaterhouseCoopers. And during the course of his career, Kyu-Dong has built extensive knowledge and experience dealing with the challenging tax issues of multinational companies' cross-border transactions and their Korean operations. Kyu-Dong also specializes in structuring inbound and outbound investment funds. Aside from his professional work, Kyu-Dong is a director of the Korean branch of IFA and serves as a member of National Pension Fund's 2 investment committees. To the left of Kyu-Dong is Chang, Kahng. Kahng is a senior foreign attorney at Kim and Chang. Mr. Kahng's major areas of practice include international tax planning and controversies. Sean has extensive experience in advising multinational enterprises and high net worth individuals on international and Korean domestic tax matters. Last but not the least, we have Jae-Wung Cho, who is a customs partner at Lee & Co. He specializes in customs and international trade. He has been a member of Lee & Co.'s customs practice group since 2016. And prior to joining Lee & Co., he worked at Incheon and Seoul customs offices. Based on the knowledge and experience accumulated by dedicating his entire career to the field of customs, Jae-Wung provides practical advice and assistance to domestic and global companies covering customs audits, advanced customs valuation arrangements, tax tribunal appeals, administrative litigations, and customs criminal defense. In addition to covering domestic customs area, Jae-Wung also assists clients with cross-border customs matters such as FTA on-site verification. Jae-Wung is a member of the Korea Research Society for Customs and serves as an external member of the Korea Customs Service and the Customs Valuation and Classification Institute. Now that I have introduced myself and our panelists, let's get to our main discussion. Recently, based on my experience, I have seen a number of companies being subject to a tax raid or even an irregular tax audit. Now, my question to the panelists, trying to open up the session, is whether our panelists have seen any, have been experiencing similar cases during a tax audit for while you serve your clients. I guess I can open up the stage by having Kyu-Dong share some insightful comments in terms of the trends that you've seen during a tax audit.
Thank you, Yu-Jin. This is Kyu-Dong Kim, and I guess as everyone's well aware, Korean tax authorities are very well known to be very, very aggressive. And interestingly, there are a couple of Asian-based surveys which shows that only India exceeds Korea in terms of aggressiveness of tax administration, in particular tax audit and assessment practice. And there are certain characteristics of Korean tax audits and some recent trends, and those are not necessarily the new one and has been in existence for many, many years, but in terms of degree, they have become worsened and strengthened, depending on whether it is a perspective from the auditors and the taxpayer. And these trends and characteristics are linked to the tactics of the tax auditors And all of them are actually has simple goal and one common goal, that is maximization of the tax assessment. So I guess I'm going to cover some of the recent trend and of the tax audits. And the first slide, basically this is not a particularly new one. This is the historic one. But first one is, as Yu-Jin briefly mentioned, that we've now seen number of tax audit, late audit, unannounced audit. Some people call it special audits. And in 2018 and 19, the Korean government introduced a new procedural rule for late audit. So under the new procedural rule, only under limited circumstances, tax authority can commence late audit. For example, tip off from the whistleblower and certain documents clearly indicating tax evasion. But in real world, the tax authority has interpreted the new procedural rule very, very broadly. So the general anticipation from the taxpayer back in 2018 and 2019, there will be deduction in late audit, but ironically, there has been increase in the late audit. In particular, with respect to suspected permanent establishment cases, targeting the global technology companies' Korean operations. And another trend is increase in the criminal audits and criminal audit. Normal tax audit can be converted into criminal audit if the tax auditors find criminal allegation of the certain transactions. And the criminal audit, after the criminal audit, tax authorities can make a criminal referral of the criminal issue to the prosecutor. But in the main reason the tax auditors try to convert the normal audit into criminal audit is not necessarily to make a criminal referral to the prosecutor. It's more to do with maximization of tax assessment, because under the criminal audit, statute of limitations are extended and penalty rate increase. And more importantly, in a settlement discussion with the taxpayer, if audit is converted as criminal one, tax authority will be at advantageous position to make a settlement in their favor. So third one, so they never walk away empty-handed, and significant number of they investigate thorough investigation of a related party transaction with the overseas entity, and numerous employees are being audited. Like based on my recent personal experience, 50 out of 100 employees were interviewed by the auditors, and we've seen the frequent suspension, extension of audit, and longer audit period. Again, this is all linked to the maximization of the tax assessment. The next slide, I guess the next slide, the couple of one is more to do with new one, not a historic one. And we've seen increase in exchange of information request and cooperation from treaty partners. As you are all familiar with, there are automatic exchange of information like FACA and common reporting standard, but there are exchange of information upon request as a result of tax audit. I guess until 2016 and 17, the treaty partners were not that cooperative to exchange and transmit information, mainly due to their domestic restrictions and domestic legal issue, but OECD G20 agenda for tax transparency. So from 2017 and 18 and 19, they now become a lot more cooperative as their domestic law was amended to make sure there is a effective exchange of information. And it really depends on the cases, like a tax evasion case. Treaty partners are very, very cooperative, but in a case of transfer pricing issue, as you are all aware, transfer pricing is allocation of taxing line, so they are less cooperative in the transfer pricing issue. And another trend we've seen is significant increase in the number of penalty notices. Penalty for failure to comply with a document request issued for each penalty up to 20 million Korean won. And for the last couple of years, there has been significant increase in the issuance of penalty fine notice. And surprisingly, tax authorities sometimes make a slight change in the notice and even just change the date and issue the new notices. So multiple unreasonable notices for effectively same document request. Obviously, this is extremely unreasonable practice. But one thing good is if the taxpayer raise objection for the imposition of fine, based on our experience, in most cases they are successful at court. So in such case, imposition of fine is automatically cancelled. The next slide is another new trend. This is, I guess, is more to the technical trend, and we've now seen a lot more cases of aggressive application of substance over form rule. Legal form of transaction, sometimes legitimate commercial rationale, are not necessarily respected in the tax audit. And in the transfer pricing world, due to the new regulation back in 2018 and 19, they now apply substance over form rule for the purpose of making transfer pricing adjustment. For example, typical commissionaire arrangement can be recharacterized into distribution buy-sell model for the purpose of making transfer pricing adjustment. And another trend, technical development, is the introduction of presumption of tax avoidance motive rule, which was introduced last year. Under this new, the burden of proof for non-existence of tax avoidance motive and existence of commercial rationale shift to the taxpayer. So if the taxpayer failed to comply with this burden of proof, the tax authority can simply deem chosen tax structure has been selected for tax avoidance purposes. And these are the recent trends that I have noticed over the last couple of years. Next slide, and I guess this, we've seen some notable recent tax assessment. For example, typical one is permanent establishment assessment involving global technology company. Physical fee found is IT equipment like server, data center, and transmission node and certain documents, certain equipment, and even business team belonging to the local subsidiary, which is separate legal entity from the offshore entity. And typical commissioner model where Korean subsidiary provides certain technical and supporting marketing services that disregarded and recharacterized so that agent fee is found. And if fee is found, there is a net basis corporate income tax assessment and recently open based on profit split method rather than traditional cost plus or transaction net margin with profit level indicator being like a Berry ratio. And more importantly, we've seen retroactive VAT assessment, which is gross basis assessment where fee is found with significant penalties and interest charge. And there are some intra-group service arrangement, export of services, provision of services to affiliate overseas affiliates, which often eligible for zero rate VAT, but tax authority recharacterizes so that they simply treat the services who are actually rendered to the Korean PE rather than the offshore affiliate. So zero rate application for zero rate is denied. Another recent trend is not a new one, but very common. All types of payment from Korean subsidiary to overseas entity, whether it is management service fee, technical service fee, distribution fee, or deemed payment, are often recharacterized as loyalty subject withholding tax on the basis that there was transfer of certain know-how and technical and unknown knowledges. I guess these are the most recent cases of assessment.
Thank you, Kyu-Dong. I think basically the key points with respect to the tax audit trend has been well shared by Kyu-Dong. Thank you very much. Now that we have heard from Kyu-Dong in terms of the key points, I think I would like to go over to Sean to see whether
Sure.
there are any additional comments or experiences that you may want to share with our audiences.
Sure. Hi, good afternoon. Actually, Kyu-Dong covered this new trend quite thoroughly, so I'll just make a few or several comments, some my observation of this audit trend in recent audit trend. As Kyu-Dong mentioned, that the Korean tax authorities are one of the best ones out there. And I think in Asia or in the world, I think the Australian and Indian and Korean tax authorities are the top ones out there. And when you think about why they are so good, you realize that they're quite knowledgeable about tax law itself, and they know the industry, so they are very familiar with the tax issues. And another, I think, the characteristics of those top tax authorities are they're very thorough, very, very thorough. So, so as a tax advisor, it is somewhat, difficult to kind of deal with those smart people out there. But then, we try to keep up with them as well. So, so all the kudos to the Korean and then Indian and Australian tax authorities. So, so in Korea, they frequently, the tax authorities use the rate type audit quite frequently. Then these days we are seeing a little bit of a, I think, a decrease in number of the audit type, the rate type audit. But then in some cases, they just they employ the so-called like a same-day service. So they just come in and they start the audit right away. I mean, usually they give you about 2 weeks of advance notice. It's just a regular audit. But then now we are seeing a little bit less number of raid, but then more of the same-day service. So that's I think a new trend I'm observing. And by the way, I only advise the foreign multinationals. So I do not know the purely Korean domestic companies, how they are being audited. So even for the foreign companies, I think the rate type audit is quite popular for the tax authorities. And it appears that they believe, the tax authorities believe that they can collect more information than in a regular, like advanced kind of notice audit situation. So I think it's still very popular for tax authorities. And just getting a little bit more into the rate type audit, for international companies, I think a rate, especially for European or the US companies, the rate is rather unusual in tax situations. So nowadays, I think a lot of companies are quite well educated. So they know, the rate does not mean something terribly went wrong in Korea. It is just another kind of type of audit. So now they're educated, but then still, I mean, rate is a very serious kind of very stressful situation. I mean, like a 30 or I don't know, sometimes maybe 40 tax officials coming out to your site, and then they nicely demand you to sign something, and then they can, so that they can access the data and the documents of the company. So if you have never had that experience of a receiving end of that audit, you cannot really know the how stressful that is. I mean, I was never a receiving end because I'm an advisor, so I always advise them. But still, I mean, even for me, that was quite stressful situation. So, yeah, audit is a very, I mean, rate type audit is very stressful situation for the clients, and when we observe it, and I'm going to make maybe a couple of suggestions about the RAID type of audit. I think the companies needs to have some sort of manual. If RAID comes, then they need to have the contact information, who to talk to, and who can sign off on that consent letter or consent form the tax authority asks you to sign. So I think having a manual can be very helpful. So that's something we suggest to our clients. And another thing is that in RAID type of situation, tax authorities can collect a lot of information. So, and one of the main, I think, role advisors are playing is that somehow kind of limit the scope of that the collection. But then a lot of times we realize that the clients, the employees or officers of the clients has a lot more information than they are supposed to have. So one suggestion we have for the client is that if they have a document retention policy, enforce it. Sometimes we find those information, really old information there, and it's. And I think information stored in the server is fine. I mean, I think the company can control it, but then a lot of times in the laptops of each employees, that's never been kind of cleaned for many years. So I mean, you are not hiding anything, but then too much information is not necessarily good in all this situation. So that's the suggestion I would like to make. And I think also Kyu-Dong covered this audit issues quite thoroughly. So in the BO type issues out there, we've observed that the tax authorities actually go to the foreign countries to look at the facilities or human resource employed over there, like a holding company situation. So if there's a some holding company or some SPC collecting income from Korea in a withholding situation, and they want to verify whether the recipient is actually qualify as a beneficial owner. And I don't know, I'm always wondering, when they do that, they're going out there overseas, so it is beyond the Korean tax authorities' jurisdiction, and go out there, and the company's client is voluntarily cooperating, but still, they go to see the facilities, and then they talk to them, and they come back, and what they found can be used, I think, in their, to support their argument. So, as a lawyer and professionals, as a professional, we are kind of wondering, can they really do that? But then it happens. So in a big kind of serious cases, they actually do go out overseas, and then look at the go to meet and go to see the taxpayers' facilities. And the PE issue, and Kyu-Dong also covered this. We see the VAT issue is quite troublesome. It is as Kyu-Dong mentioned, that the VAT is tax on gross the revenue. So even if you lose money, you need to pay VAT. And if they find a PE, it is kind of funny situation, because client doesn't know there's a PE, but the tax authority finds a PE, and then they are going after you. I mean, going after the client, saying, "Oh, you didn't comply, with the VAT, the rules." I mean, shouldn't they give like a VAT kind of credit as well? But then, in Korea, they don't give the VAT credit, so you are just paying the VAT you owe. That can be large amount of money there. So. PE issues are very critical in many audit situations, and then I think all tax authorities are really going after that issue. And VAT is income tax. If we lose that point, we can pay tax. It is income tax, but then VAT is something that can be a serious problem for a lot of clients. And another issue we frequently encounter is a TP issue is always there. And these days we are seeing the tax authorities are really carefully review TP documents, and then they ask to interview the TP document, the preparer of the TP document as well. So you can see, how much emphasis they are putting on, reviewing the TP documentation. And a lot of those multinational companies, they have, most of them have, the transaction with their foreign affiliates. So TP issue is always there. And also, in not only TP, generally, they ask for the information, and then the documents, for taxpayers to submit. And not complying with that can be subject to the administrative fine, and they can really go up quite high, because they tend to impose like a repeat fines, and then sometimes they, if there's like a one IDR, the information and document request, it has 100 items, there can be just a one IDR, or you can divide it up and you can have like 100 IDRs. So, that's the tax authority can be creative in imposing the administrative fine, but then, we will see, I think maybe there might be some change, in that area. Maybe it is a little bit too aggressive for, them to impose the, fines that way. And yeah, in audit situation, maybe I'm just going, back and forth too much, but then in audit situation, these days, tax authorities are very much interested in the electronic data. So key kind of contestant, like a dispute point is that the access to their the electronic files, and it is always. So we have the tax authorities. There are specialists who are very good at those collecting electronic data. So. So we need to deal with them, and they use interviews quite extensively. And so I think Kyu-Dong mentioned that they interviewed like a lot of employees, and then key employees are always interviewed. And then if they want, they can probably interview all employees. But and after interviewing, they have a transcript, and then they ask the interviewees to sign, I think sometimes, and that can be. Yeah, interviews are really important. You need to kind of you need a prep, for the interview, because once you have that, and then once you sign it, there's no going back. And so and also these days that because of the P issue, the tax authorities go after this. They want to look at the functions and roles of the local employees in Korea, and so they are very much interested in the employee evaluation type of information as well, and a lot of evaluation forms that employees have like a self kind of evaluation as well, and then in that evaluation, their roles are really somewhat exaggerated. So the tax authorities can find that a lot of functions performed in Korea. That's not good for a P issue. So. But then, we have to kind of manage that as well. It is just, that the evaluation and not necessarily, that correct kind of picture of what they are doing. So, overall, the Korean tax authorities are, I wouldn't say, Korean tax authorities are necessarily unreasonable, and they're always, they're very thorough, and then they know the law, and they know issues. So what makes us kind of always struggle is that we know their position is not like a slam dunk win. It's like we feel that we can, beat them, but then they always have some grounds to it. It's not like a totally groundless, that kind of position is very difficult to deal with for the clients because, amount of assessment is huge. And, do you fight or do you just concede? I mean, it's like, so I don't know whether maybe the tax authorities are really smart and then so they know, what they're doing. But and so that's my overall observation and yeah, and thank you very much. And if you have any questions, then I can answer.
Thank you, Sean. I think from the general tax audit side, Kyu-Dong and Sean has shared a lot of information, informative information, addressed a lot of the questions that many of our taxpayers have been having in the back of their minds. Now that we have talked about the general tax side, I think customs audit is another area where our audiences and some of our clients actually have a lot of questions and consider customs audit to be equally or even more stressful than a general tax audit. So now I would like to hand over the mic to Jae-Wung to ask him to share his experiences and insights in terms of a customs audit. I guess we can start off by commenting on the type of companies that customs auditors concentrate on and the key areas of interest of the auditors.
Okay, thanks for all these insightful questions and discussions before me. And because I've heard some really thorough and meticulous comments on how the tax audit and the tax systems are done in Korea by Kyu-Dong and the follow-up comments from Sean. I think I'll try to keep my discussions very brief and concise and try to concentrate on points which are interesting and practical rather than trying to move through every single bit of slide which I prepared as an informative guide. So first, traditionally, I'll say that regarding the aggressiveness or the proactiveness of how Korea Customs Service, the KCS, does audits is not that different from the NTS. So quite often the customs officers doing audits are very proactive and very, let's say, robust in demanding information and trying to make duty assessments on the importers. However, the KCS has been traditionally gradually moving away slightly from this traditional stance of concentrating only on duty collection and has recently been assuming, let's say, self-assuming its role of border protection and compliance enforcement. Not quite similar to the US CBP in the America. So. I've experienced some recent cases where I either directly represented or advised multinational companies or the Korean subsidiaries where there were no or very little customs duties imposed on the company. For example, if the products were FTA goods or were 0% tariff rates, so there are basically very little economic impact on the company being audited. But however, there are some unexpected glitches or some, let's say, contentious information found in the document ledgers, or as Sean just commented, there are some unnecessarily visible documents or which the customs auditors found, and then escalated the case back into criminal investigation. So these were I won't go as far as to say that KCS only targets or has prejudice against multinational entities, but it is true that KCS has been gradually increasing its its portion and its concentration on trying to ask questions and ask for documents and trying to check compliance or TP matters between the Korean subsidiary and its overseas parent company. So moving on to the key areas of interest, KCS hasn't made any eye-opening changes to their traditional area of audits. So they're doing regular audits on TP and input violations, HS codes, and any FX controls, and these FTA matters. So there are no dramatic changes, but there has been this temporary pause or kind of a hiatus in the KCS audit trend partly because of the current government's change in position from the previous government, emphasizing legal compliance over duty collection and also trying to protect exporters or small to medium businesses. This means that the external number of customs audits have decreased quite a lot. So, starting from when I first started my career about slightly less than 10 years ago, in the early half of this decade, the KCS had many standing and ad hoc teams which actually specialized in conducting audits and trying to aggressively collect duties, and which sometimes ended up the KCS auditing over 450 companies per year, which is a really great amount of number. But since this current government, KCS has been gradually decreasing its numbers. So in the last 3 or 4 years, the amount of companies being audited by KCS has stabilized to somewhere around 200 and 250 companies per year, which seems as if the government is relaxing its grip on importing companies. However, as I just briefly mentioned, KCS was stressing its role on trying to check if the importer keeps to the rules, the various laws and rules, which can be quite complex in many cases. And even in such cases where there's a procedural or formal flaws or human errors in the importer's documentations, and where there are no duty evasions or no kind of loss in tax collection, they often move the case up to criminal investigation and try to penalize the importer. So I'll be just briefly discussing this at the end of this session, but I would like to suggest the Korean importers, both domestic and international, to keep a close eye on how KCS conducts audits and tries to check for any mistakes or flaws in the proceedings of the customs clearance process. So if we could move on to the next slide, please. As I mentioned, there has been some recent decrease in the customs audits, partly due to the government's emphasis on compliance over collection. But another important factor is that the recent unexpected shockwaves coming up from the coronavirus pandemic has restricted cases, let's say, modes or methods of gathering information from the importers. So until the recent months, around September to October, KCS had some internal instructions or practical kind of, let's say, unwritten rules that they should refrain as much from field audits or personal interviews when auditing companies. This meant that KCS officers found it extremely difficult to gather information if the company is being uncooperative, and led to relying heavily upon electronic documentations, which are either voluntarily filed by the importer's customs broker, or which could be surveyed or researched or shared from other intelligence agencies, such as the NTS or the prosecution service. This naturally connected to cases trying much harder than it used to do in the past, trying to coordinate with other Korean government agencies which are in charge of tax collection or criminal investigation. And in some of the high-profile cases where either the amount of duty is very high or where there are potential criminal risks involved, I've directly or indirectly even seen KCS officers trying to interview or go on overseas trip to on-site visits to verify the authenticity or the truthfulness of the Korean company's documentations or interviews to its US or European headquarters, or perhaps the APEC region in Singapore or Hong Kong. Of course, the COVID-19 has limited such actions down to minimum, and we haven't seen much actions by KCS in quantity yet. So last year, there were barely over 120 companies being audited, which was a great decrease, even within this Moon administration. But as everybody can probably make a good educated guess, this kind of hibernation by KCS auditors aren't going to last forever. And you may have seen some, if you have seen been watching the Korean news with much interest, the Korean health and quarantine authorities have already announced its plan to relax the so-called social distancing measures starting from this early November. And in anticipation of this relaxation, KCS has already started or plans to start multiple fresh audits on multinational importers and major Korean corporations, or new audits. So Combining these two factors together, that first the cases sets great importance on the procedural compliance of taxpayers as well as duty collection, and second that this temporarily paused this disruption to customs audits caused by COVID-19 is nearly about to end, and the cases trying to normalize the quality and quantity of their audit. I think that the next year would see many fresh changes to how KCS conducts audits. And in some areas may even see some audits which are much harsher and stricter than it used to be in the recent 2 years. So if you could please move on to the next slide. Because I've been discussing most of what I want to say in this way. I won't be going through these three examples in much detail. If I talk too much about the actual examples, then I might just slip by the slip of the tongue. I might just mention the too much information about how our clients or our colleagues did. So, but first, I'll be very short. And the first case was that. The Korean, it was a big Korean company which ended up having customs duties imposed, but not up to an unreasonable amount. But the company initially was internally debating whether to go to the tax tribunal and try to appeal against the KCS taxation. But as you can probably guess, it gave up midway because the KCS officers kind of made this implicit remarks that things may escalate to investigations and some more grayer, darker areas if the company made too much, let's say, complaints or appeals against these audits. And we found that eventually the company concluded the audit somewhere in the midway, kind of informal compromise. So. And the second case is probably the worst case scenario which we can imagine when legal counsel are advising, represent, or defending a company in a customs audit. So, some of my colleagues in another major firm which is not here in place once advised a customs audit in a big major company where they successfully defended against the KCS attempts to levy duties and import VATs on the taxpayers. So they ended up with 0% addition to the original tax impact. But the company, part of the company's documentations and electronic data were disclosed to KCS, for which the products were 0% duty goods, so there are no tax impacts, but they are found to have some severe flaws or mistakes in the legal procedures which has to be fulfilled before being imported. So this just highlighted the importance of how thorough the importers should be when conducting their customs documentations and what kind of information to be submitted and explained to customs. And the last one is a rather interesting case where there were no serious criminal risks or concerns, and there were just this small amount of duty assessment. So the assessment itself wasn't really that great. So it was just a little company, but the case initially kicked off with the FTA issues. So the KCS officers were trying to challenge the Korean importers' FTA preferential tariff rules. They were trying to contend that the wrong FTA standard criteria was applied to this import product, and that the FTA should be repealed. But the company, with this help with this counsel, succeeded in defending that the FTA application itself is okay. There are no problem to that. But during the course of this, explaining the products and the FTA origin information, they found additional information that the pricing rate of the products were actually inaccurate. So the products ended up having the FTA defended, but eventually getting customs duties and VATs assessed anyway. So this showed this rather untraditional approach of cases internally cooperating between the FTA section and the customs valuation sections. So. From another sense, this shows the importance of when defending and representing audits, the customs brokers and law firms should try to cooperate internally between the TP departments and customs and multiple areas if possible. So I think I've said almost what I want to say, but just before I let Mr. Kim and our team take the floor back again, I would like to just make an interesting remark, which I just remembered from Kyu-Dong's remark of Indian tax authorities. A couple of years before I went to, all these COVID-19 mess began, I went on a global conference to Turkey in the World Customs Organization hosted, and there I met some Indian and Pakistani customs officers who said that in their country, there are almost 99% of the products during customs audits are resolved without this criminal disputes or litigations. And I asked them why, and they said that because the Indian officers actually kind of give them a nudge and pressurize the importers into making voluntary extra payments. And amendments that they always make up and end up without ever going to criminal or in the tax courts. And fortunately, I think that because due to the interest of time and important topics, I made some rather aggressive remarks against KCS and the tax and customs society in Korea, community in Korea. But I think that our country is still relatively much more advanced, and that we are much fortunate that compared to such instances, we still at least have the legal kind of opportunity to properly defend and argue against any customs or tax audits. So that's all for my comments then. Thank you.
Thank you, Jae-Wung. Even for a customs, from a customs audit perspective, I think Jae-Wung has shared a lot of information, which is very helpful, especially considering that all of these comments are coming from his own experiences. I think we can really appreciate the information shared today. We have about 10 minutes, so before we end the session, I'd like to ask our panelists to comment on what we should be expecting going forward. There is no question that the NTS and the KCS tax audits are aggressive. Question is whether this aggressiveness will continue into the future. In addition to that, now from in the international tax community, we have the Pillar 1, 2 rules coming into play, which will be potentially implemented starting from 2023. So taking all that into consideration, I'd like to ask our panelists to comment on what they think the future looks like in terms of tax audits and customs audits. I guess I'll ask Kyu-Dong to share his comments first.
Thank you. I guess I can make a short comments to Jae-Wung's interesting remark. And actually, one privilege we have in this historically IFA conference, we are free to criticize Korean tax authorities in these sessions. And no doubt for future trend, as briefly mentioned by our panel members last year and early part of this year, tax audits relatively slow, but they are picking up third quarter and fourth quarter of this year, and there will be a lot more tax audit 2022. And multinational, most important one would be continuation of PE finding. And one, I think one thing, in terms of technicality, tax authority now have more strong technical weapons, and they have now the expanded scope of PE under domestic tax law, and also OECD model tax conventions and MRI PE article, and OECD development basically which focusing on higher taxation on market jurisdiction and consumer-facing businesses will also have will also allow the tax authority maybe more aggressive in finding a PE. And no doubt there will be continuation of criminal audit and late audit. And another important aspect is there will be some impact on MLI, multilateral instrument. And Korea has adopted only the mandatory and the common approach like proposal of tax audits and procedure rule for MAP, and also the treaty of use principal purpose test. Especially, we have adopted principal purpose test as part of the treaty of use article of MLI. And principal purpose test is clearly and very closely linked to the Korean domestic substance over form rule, especially step transaction doctrine. So the MLI, which ratified December 2019 and became effective September last year, and we've seen a recent tax audit. The auditor says they now have a clear legal basis to apply aggressively apply substance over form rule, because principal purpose tax is now the part of bilateral agreement tax treaty with more than 30 countries. So that's I guess there will be more there will be more a challenge based on substance over form rule with the MLI. And last slide on the tax audit side, and we know that there has been maybe tentative agreements, still a lot to go, but fundamental key provisions have been agreed by OECD and inclusive framework. And for Pillar 1, some people say, oh, under Pillar 1, the Korean tax authority may collect more taxes from global multinational. I guess that might be true, but my personal view is there might be no real practical impact, because over the last couple of years, the level of tax level of profit allocated to Korean subsidiary and Korean PE is in the recent couple of tax audits, especially the US technology companies, actually higher than the amount that could have been assessed under Pillar 1. So that's why I'm saying there might be no practical impact. But no doubt the Pillar 1 will provide justification, the legal basis for tax authorities allocating higher profits to market jurisdiction, in this case Korea. And Pillar 2, I guess for multinational there will be no impact, because Korea's corporate income tax rate is 27.5%, and obviously higher than minimum tax rate of 15%. So no real impact. And some people say, I don't know, maybe this is maybe the expectation and the hope of the Korean government, and there might be some positive impact on the introduction of foreign direct investment into Korea, because Korea's tax competitiveness will become better, because some of the countries like Central Europe and Southeast Asian countries, which heavily rely on foreign direct investment, they were forced to abolish some of their tax incentives under Pillar 2.
Thank you, Kyu-Dong. With the few couple of minutes we have left, I guess we also want to hear from Jae-Wung in terms of what is expected going forward from a customs audit perspective.
Okay, thank you. So, I think that I've had more than ample opportunity to emphasize what I wanted to speak in this session, but I'll just like to remind any major prominent companies doing import and trade business in Korea that the KCS is just about to wake up from a deep slumber, which went on for almost 2 years due to the COVID crisis. And that the pre-audit health check, let it be whether it's done internally or externally, should be considered for companies which have a large import volumes, or which are trying to implement fresh transaction structures to their businesses, which may unexpectedly draw the attention of Korea Customs Service. And I would like to just wrap up this session by saying that not every legislative or systematic changes expected next year are negative for the customs society in Korea. There is a clear people working in the customs law and legal community may be aware, but the Korean VAT Act is proposed to increase the scope of import VAT's kind of recovery to importers who are assessed additional VAT by customs officers during audits, starting from January 1st next year. So in the past, many Korean importers and multinationals had to go to the appeals in the tax tribunal or customs court, trying to get their import VAT refunded or recovered as a result of customs officers levying extra VAT but refusing to issue the additional VAT invoices. However, thanks to this proposed legal amendment, we believe that there will be a less tax or VAT impact or risk for Korean importers. So In short, I think that there will be the financial impact for multinationals in the Korean customs society next year would be similar or less burdensome than the previous years. But we should all keep an eye peeled open for any possible investigations on procedural or non-taxation matters. So thank you for listening to what I wanted to discuss with the team today.
Thank you, Jae-Wung. Before we close our session, Sean, would you have any final comments to share with our audiences?
Well, I think now is a quite exciting time for international tax people, practicing international tax. So we have this OECD, Pillar 1, Pillar 2 project. I don't know. I mean, all the excitement, maybe at the end, everything will just calm down and it'll become some sort of a routine kind of, procedures or matters. Maybe we are going to just do it, without maybe. But then, at least for the moment, it is a really exciting time. It really changing the international tax landscape. So, yeah, I think everybody needs to be tuned in, on this one. Yeah. Thank you.
I think our time is up, so I would like to close our discussion by thanking our panelists for sharing their experiences and insights. And I hope this session has been informative to our participants today. Before letting our panelists go, I'd like to open up the floor for questions. If there are any questions that may have come through, do let us know. It seems like there is none. So, well, thank you for your participation, and I hope you have a great rest of the day. Thank you.